Hello guys, welcome back to another video. We are solving question number 32 in this video, which is a ratio analysis sum. If you have missed out the previous sum, do check out the entire playlist in the description box below. The link to this paper is there as well. This is a CBSE Sample Paper 2024 for Accountancy. If you don't want to miss out the future videos, you have to click on the subscribe button and hit the bell icon to get notification whenever a new video is shared. Alright, without further ado, let's get started. This is a 3-mark sum of ratio analysis. We have the information that is already given, some of them, like a company had liquid ratio of 1.5 and current ratio of 2 and inventory turnover ratio of 6 times, right? It had total current assets of 8 lakhs. You have to find out the annual sales if goods are sold at 25% on cost, and this is the point to be noted here, that 25% is on cost. Okay, that will help in further calculation. Then second part will come to that a little later on. Let's complete the first one. So we have liquid ratio given to us, we have current ratio given to us, inventory turnover ratio also given to us, and we have current assets given to us, right? So we will pick up the formula where we have two unknowns, two knowns and one unknown, which is the current ratio formula. As you can see, we have the current ratio given to us from this ratio, and we have the current assets given to us. So current liabilities we can easily find out because only one is unknown here. All right, so let's put the value here. For current ratio, we have 2. Current assets are given as 8 lakhs, and current liabilities we have to calculate, right? So in that case, current liabilities become 8 lakh by 2, right? Straight away, a normal maths. So current liabilities comes to 4 lakhs. All right. So we have got our current liabilities. Now let's move on to the other ratio which is given, the liquid ratio, which the formula is liquid assets by current liabilities, right? Liquid assets means current assets minus inventories. So that will be required as well. Current ratio was current assets by current liabilities. So let's put the value that we have here. So we have 1.5 as a liquid ratio. Liquid assets we have to find out, we don't know yet. Current liabilities just now we calculated 4 lakhs, right? So if you just solve this, then let's calculate liquid assets will be how much? Straight away 4 lakh into 1.5, right? So 4 lakh into 1.5, that gives me 6 lakhs. Okay, so that's my liquid assets. Liquid assets we have achieved. Now we have to calculate the inventory. As I told you, so the formula is current assets minus liquid assets. Current assets we have got it as just now 8 lakh already given in the question, and liquid assets are 6 lakhs. So in that case my inventory is 2 lakhs, right? That becomes my inventory. Now we have the inventory turnover ratio given to us. Average inventory is not mentioned in the question, so our inventory itself becomes our average inventory. We have to calculate the cost of revenue from operations, which is also called the cost of goods sold. So cost of revenue from operations is inventory turnover ratio into average inventory, which is inventory turnover ratio is 6 into average inventory, which is 2 lakhs. So that comes to 12 lakhs. That's my cost of revenue from operations. Okay. Now coming to gross profit is 25% on cost. So that will be 25% of 12 lakhs, right? That comes to 3 lakh rupees. A straightforward mathematical calculation. Now we have achieved the gross profit. Revenue from operations, which means the sales amount is gross profit plus cost of revenue from operations. Okay, so that's 3 lakhs plus 12 lakhs. So that's coming to 15 lakhs. So that's my answer. Revenue from operations is 15 lakhs. That's what we are required to calculate the annual sales. Okay, first part is done. Let's move on to part B that we have. Here we are required to calculate debt to capital employed ratio from the following information. we have the formula as debt by capital employed. Now debt is straightforward given here, 7,50,000. We don't have anything else as debt in the question. So that becomes 7,50,000 for us. Let's write it down. And capital employed is the total capital that we have, which is the own fund as well as the borrowed fund. Okay, so capital employed will be 15 lakhs plus the 7,50,000. Okay, don't get confused. This is important to remember that capital employed includes your equity and borrowed fund both, right? So that becomes 7,50,000 by 22,50,000, right? So 7,50,000 by 22 lakh 50,000. So the ratio that we get in terms of decimal will be 0.33, right? Or in terms of fraction, if you want to write, that's 1:3. Okay, 1 by 3. All right, so you can also write that as 1:3. That's my debt to capital employed ratio. All right, hope this was helpful. If this was helpful, hit the like button. Mention two key takeaways, two learnings that you have achieved from this video in the comments box below. We'll catch you all in the next video with the next series of sums that we have. Stay tuned for more. Thanks for watching, guys.